Awesome. Well, thank you for having me, Lauren. Thanks to Steve for setting this up. Thanks to the Flood Board and the city of, or town of Pompton Lakes for having me. So let me get my PowerPoint up here. Steve, you have to pass control to me?
You are now presenter, so.
I got it. Yep. All right. So you should see my PowerPoint. Is that correct?
Yep.
Okay. Great. Awesome. And do you not see the little WebEx box? I just want to make sure you see the full PowerPoint.
It's like a grayed out box. If you slide off your screen, it'll show the full screen. It's just blocking part of it right now.
Okay. Let me hide video. Got it.
There you go. That's a smaller box. You're good.
Perfect. Awesome. All right, yeah, so thanks again, like I said, to Lauren, Steve, the Flood Board, and Pompton Lakes. My name's Tyler Ardren. I'm with Risk Reduction Plus Group. We're a flood insurance company. We specialize in flood insurance. But today what I'm going to be talking about is flood insurance in general, the National Flood Insurance Program, and going over how to save off your flood insurance through mitigation, and then some other ways too that we'll get into here. So let's see, here we go. So a little bit about us. We've been in business now over 20 plus years, educating professionals, homeowners on how to build properly in flood zones, flood mitigation, flood insurance, and anything and all related to flood. Myself, like I said, my name is Tyler Ardren. I'm a certified floodplain manager, or CFM, and all my staff, they're also CFMs. It's one of the criteria we have here at our company. But we do outreaches like this nationwide. We do them all over. Last night we did Cape May Point, and we've done many towns in New Jersey, and then also the rest of the country. We're actually talking to New Mexico now to do another outreach out there. But we have an average track record of 83% savings based off the steps that we typically recommend to mitigate your home. Now, there at the bottom, you'll see we have a unique email address, pomptonlakes@yourfloodrisk.com. I ask that if you do have any particular questions about your home, send them into that email address, or if you have an elevation certificate that you'd like me to review, or like my team to review, we'll look that over. We'll see if there's anything that we can do mitigation-wise to your home, and then we'll be able to tell you what your actual savings is. And that's one of the biggest things that we're able to help with, because a lot of people will hear, if you raise your mechanicals, it'll help you save money. If you do this, it'll help save money. But getting that true return on investment is so critical, because that's how you can really weigh your options. Is it worth raising mechanicals? Is it worth doing that? And we'll be able to give you the actual premium that it'll go down to. So say, it lowers it 83%, and you look at the cost of what that job is to do, it makes it a real no-brainer if that is the case. So like Lauren said, if you do have any questions, feel free to stop me. Raise your hand. I like to keep this real interactive. Typically in person, it's a lot more interactive because we're in person. But feel free to stop me, and we'll get to your question right away. So just some flood statistics. Flooding is the #1 natural disaster in the U.S., and in fact, all 50 states in this country has experienced floods the past 5 years. It's getting worse and worse every year, as you see on the news. There's a new hurricane, multiple hurricanes a year. But Hurricane Harvey, actually 70% of the losses were outside flood zones. So if you're not in a special flood hazard area, which we'll talk about what that actually is, you're not required to have flood insurance by your lender. It's still recommended that you do get flood insurance. And these stats down here are really signals to tell you that it's very important. 70% of their losses were outside of flood zones. 20% of the NFIP claims are in mid to low risk areas. And a shocking number here, 94% of Americans don't have flood insurance. Usually, if the bank requires it, then they have to. If the bank doesn't require it, most people don't get flood insurance. And actually, if you are not in a special flood hazard area, so if you're in a lower risk zone, which like I said, I'll go into detail what these zones are, But if you're in a lower risk zone, you can get a flood insurance policy for under $500 a year. And a good example I like to give is that most people here have a phone, you know, an iPhone like this, and most people have insurance on their cell phones, typically paying $10, $15 a month to insure your cell phone. And this is, you know, maybe an $800, $1,200 item at most. And now we look at your home, that's your greatest investment. So if you are in a low risk zone, I definitely recommend to get flood insurance. You can get it for a very minimal price, as long as you're outside of the special flood hazard area. Now some definitions that I'm going to go over. We have your BFE, or your base flood elevation level, and that's the calculated level that water will rise to in a flood. So if there is a flood, FEMA's saying that, you know, it will get to, say, that point, whatever your BFE is for your area. And what's important about the BFE, all of your flood insurance is calculated off of that, if you do have an elevation certificate. And what I mean by that is the flood insurance is done by getting the elevation difference. So what that means is having your first living floor, or the lowest rated floor, compared to the base flood elevation level is how we get your rate. So say you're a foot under the BFE, then you're considered a -1, and you're probably paying anywhere from $1,800 to $2,300 a year. If you're 1 foot above the BFE, then you're a +1, and you're probably paying $800 a year. So it's all based off elevation differences, but that does consider the elevation certificate. So you do have to have that to kind of figure out what your elevation difference is. The community rating system, or the CRS, what that is it's just a program that towns will join to go above and beyond the normal NFIP codes, the National Flood Insurance Program. And what it does is it rewards the communities by giving them a discount collectively off of their flood insurance. And then we have freeboard down here, which just means elevating a building above the BFE. So the state of New Jersey is a 2-foot freeboard requirement. Other towns may have more. It all depends where you're located, but that's mainly for new construction or substantial improvement. So if you're doing a 50% or greater change to your home, then you're going to have to come up to the most recent flood codes.
Tyler, this is Lauren. I'm just going to interject real quick in here. Pompton Lakes does participate in CRS. For any residents who are called in and aren't aware, we're at a level 5, so that's up to 5% savings, and our local ordinance requires 2.5 feet of freeboard.
That's great. That is awesome. And what that does is gives you that discount that Lauren just said off of your flood insurance. And it takes a lot of work for from the town standpoint to do that program. So you definitely want to thank them for that. There's a lot involved with it. What happens is the town gets points for different sections. This event actually gets them points. And the more points that they get, the lower class they are and the higher discount they get. But a lot of work's involved with that. So definitely thank the town for doing that. There's a lot of towns that aren't in the CRS program. So like I said, we're going to get into them flood zones. So we have your A zones and we have your V zones. Pompton Lakes, something just popped up. Susan is requesting to annotate. Oh, it just disappeared. Okay. So there's not going to be any V zones in Pompton Lakes, but there are A zones. Anything with A in front of it typically has an established BFE. There are some unnumbered A zones still that don't have BFEs, but what it means is that there's low wave impact, so mainly riverine flooding in Pompton Lakes. But the biggest thing here is the mandatory purchase requirement. So if someone's coming in, or if you already have a mortgage, you know that you're required to have flood insurance. And typically it's the lesser of the two, meaning the value of your home or the amount of your mortgage. So say you buy your house at $200,000, typically the lender will require $200,000 in building coverage for your flood insurance. Now the NFIP, which I'm going to get into here in a minute, but the NFIP has a maximum coverage limit of $250,000 in building coverage. So if you buy a home that's more than that, say $400,000, they're going to only require the maximum coverage limit, which is $250,000. And there's the coverage limit. So for a residential structure, we have $250,000 in building, and this is all through the National Flood Insurance Program, keep in mind. I am going to get into private flood insurance for everybody, but at first we're just going to stick to the NFIP program. So residential structures, you have a maximum coverage limit of $250,000 in building and $100,000 in contents. And then for commercial structures, you're able to get $500,000 in building coverage and $500,000 in contents coverage. So the NFIP is going under some reform. It really started back in 2014 with the Bigger Waters Act. Some of that was repealed with the HIFA. I'm going to go into that here shortly. But the reason why the NFIP needed to reform was exactly this. On the left here, you can see what the NFIP brought in from a premium standpoint. So here we have 2005, Hurricane Katrina. They brought in $1.9 billion. And then Hurricane Harvey, Hurricane Sandy, we're up to the $3 billion mark in 2012 and 2017. But on the right in that graph, you can see the amount that they paid out. So in 2005 with Hurricane Katrina, they paid out upwards of $19 billion. And then the same thing happened in 2012, in 2017. 2008 was pretty high there, you can see. Needless to say, the NFIP is at a deficit. They're over $20 billion in debt to the U.S. Treasury. So because of this, they had to undergo some reform. In 2012, they came out with the Bigger Waters Act, and then in 2014, they came out with the Homeowners Flood Insurance Affordability Act. And all that did was repeal some of what the Bigger Waters Act was bringing on. And what it's doing is it's increasing premiums. And again, you've seen these increases in Pompton Lakes. It's everywhere. It's anyone that's part of the NFIP program. What they're doing is they're increasing premiums 18 to 25% a year. But what these premiums are for subsidized rates. They're the ones that they're phasing out. And what they're doing is they're saying that these subsidized rates, we don't know the actual risk rate. And this is the reason why we're at such a deficit. Because this person that's paying a subsidized rate is paying a lot less than they should be for their actual risk rate. Now, it could be that your actual risk rate is actually better than what the subsidized rate is, but they don't know that, meaning the National Flood Insurance Program and FEMA does not know that because they don't have your elevation certificate. And that's what's used to figure out what your actual risk rate is. Remember what I was talking about earlier with the elevation differences? The only way to get that is with an elevation certificate. So that's the only way to get your actual risk rate. So what's going to happen if you don't have an elevation certificate, you're going to continue to increase 18 to 25% a year. It's mainly 18% for Pompton Lakes because of their mainly primary residences. The secondary residences are the one, and commercial are the ones that are seeing the higher increases. But you've already seen these the past 3-4 years, these increases. And why they're doing that is exactly what I said. They're phasing them out, these subsidized rates. Along with that, in 2015, they added some surcharges, a $25 surcharge for primary homeowners and a $250 surcharge for non-primary homeowners. And you can check this right on your insurance declaration page. If you take that out and you look at the bottom where all the premium dollars are, what you're paying, right above that, you'll see HIFA surcharge, HFIAA surcharge, and it'll either say $25 or $250. So check that just to make sure, because I've seen errors with that. Make sure that, say it is your primary residence, that you're getting that $25, you're not seeing $250. Because that's an easy fix that you could save a couple $100. Every April, the NFIP undergoes rate changes. Just this recent April, on April 1st, 2020, they're increasing premiums for a primary pre-firm home 7.5% on average. Non-primary SRL, and I'm going to get into that in a slide here, substantially improved the non-residential structures, seeing anywhere from 23.1 to a 25% increase. And then post-firm rated homes with an elevation certificate are seeing a 5% increase. And just to be clear, a pre-firm home means that the home was built before there was a flood insurance rate map in effect. Typically that's mid-70s and earlier. It all depends when the first map was adopted in your town. But that's what pre-firm means. Post-firm means that you were built to a certain flood insurance rate map. So you were built in 1990, 2000, depending on your area again. You'd be considered post-firm. So repetitive loss and severe repetitive loss. Do you have a question?
Yeah, real quick question, Tyler. This is Lauren again. So I think all of the overwhelming majority of our homes in Pompton Lakes, excuse me, are pre-firm.
Yeah.
Pre-firm structure with an elevation certificate still falls into that primary pre-firm category?
That's correct.
Okay.
Yeah.
Thank you.
Sure thing. Yeah, post-firm properties are required now to have an elevation certificate. So we can't rate without one. Pre-firm homes, they're still eligible for subsidized rates. Now, like I was saying though, it could be beneficial to get an elevation certificate because it could show that your actual risk rate should be less than your subsidized premium. It looks like someone's hand was raised. It popped up there.
Looks like Carmen has a question. Let me unmute them. So Carmen, go ahead.
Yeah, I just have a little question because, it's very confusing for me. But all I know is that in 2017, I was paying about $3,800 insurance. Yep. This August, my bill came, I almost had a heart attack, $9,200.
Yeah.
And of course, we ask our neighbors, people that live down the block, closer to the river. They pay not even half of what we pay. So my question is, and I don't know, we're trying to figure it out why. I went through the certificate, the elevation certificate. I talked to FEMA. I talked to my broker. I did everything I could. They will not lower my premium. $9,200 is as much as my taxes. It's ridiculous for my home.
Yeah, yeah.
And there is nothing, nobody could help me.
Yeah.
Could it be because I have no mortgage? I don't know. It's the only thing that I can think of.
No, that wouldn't have anything to do with that rate.
So why am I paying that and the people that live 5, 6 houses down from me, which are closer to the river, are paying less?
Yeah, so like I was saying earlier, with the elevation difference from your elevation certificate, that takes a lot into account on this. Now, being that there's someone five houses down, they're probably a very similar elevation difference. So I would like to see your elevation certificate, Carmen, because I want to see what that elevation difference actually is. Sometimes the insurance agent has you in a subsidized rate. It sounds like you're in a subsidized rate right now. Are you a severe repetitive loss?
Yes.
Or,
severe.
Yeah. You said yes?
Yes.
Okay. So it sounds like to me that you're in a subsidized rate still as a SRL property. And what I want to do, like I was saying, was look at your elevation certificate, see what that elevation difference is, and see what your actual risk rate is. Because I have a feeling that your insurance agent is not rating you off of that and that you're still paying a subsidized premium. And a quick way, if you have your insurance deck page, how you can tell, and this is for everybody, how you can tell, look at the deck page. It's the front page on your insurance. It'll tell you like your coverages and everything, and you'll see elevation difference. And then after that, it'll give you a number. If you see that it says NA, that means that you have a subsidized rate right now.
Okay, hold on. Let me look for it.
Yeah.
Hold on. No, the only thing that I have is the renewal flood insurance policy.
Yeah, it's not on your renewal. Yeah, it's not on your renewal. It'll be on your deck page. So it'll be last year's policy if you didn't renew yet. And it's like
I did renew. Hold on one second. I have it in it. I'll look for it and then.
Yeah, you look for it and then either stop me at the end or use that email address or just give me a call. I'll give you my number after this and then I'll take a look at it as well. But that goes for everybody. If you're looking at your deck page, look at the elevation difference. If you have an elevation certificate and it says NA, I want to look at that elevation certificate because the insurance agent could have you as a subsidized rate still. And a lot of times the subsidized rates are getting so high that the actual risk rate is where you should actually be. Yeah, look at that and let me know on that.
I'm glad that someone is willing to guide me on this because I had a hard time back in August when I had to do this. I spoke with FEMA, I spoke with so many different people, and they couldn't help me. The only thing that I did to bring it down to $6,000 was to hire my my deductible.
Yeah, up the deductible and lower your coverage. Yeah. Let me like I said, let's talk after this or at some point. I'm interested to see the deck page. I'm interested to see the elevation certificate. And I'll just say this: there's a huge lack of knowledge with flood insurance. I hear all the time, especially in these outreaches. I just did one last night, like I was saying. I hear all the time that they go to their insurance agent, they ask why, and the answer is, sorry, it's the government, that's what they charge.
Yep, that's basically what they told me.
Yeah, so you can tell I've heard this before. So what I tell you is I'm not going to give you that answer. I'm going to give you the details on what you can do to your house. And it's not that there's an easy fix for every single house. Trust me, I wish there was. But even if it's something like that you have to do your home, there's a lot that you have to do to your home, at least it's an answer. Or if you're paying $9,000, I'm going to tell you why you're paying $9,000. Because you're 6 feet below the BFE, for example, or whatever the case is, so that you actually have these answers and you have steps so that you know what you need to do. So say, worst case scenario, you need to raise your house. Well, at least somebody's telling you that, and you can make a sound decision of, do I want to do that? Do I want to just get out? Whatever that case may be, but at least you have all the answers on the table. I'd hate to be in, say, your shoes and just get, oh, it is what it is, because now you just think there's nothing I can do and I'm stuck and it keeps going up and up. So I want to make sure that you have all the answers to make a sound decision. And like I said, just get with me after. I'll be able to look more into that and get you those answers. And at the end, I'll have all my info on there so that we can make that happen.
Okay.
So repetitive loss and SRL. Here's just the definitions for you. So a repetitive loss property means that you had 2 or more claims more than $1,000 over a 10-year period. And then we have your SRL properties, which is 4 or more claims more than $5,000 or 2 or more claims that exceed the current value of the property. And this is all in a 10-year window for both RL and SRL properties. And like I was showing you in a couple slides ago, these properties are seeing the highest increases. The rates are seeing the highest increases, especially the subsidized ones. So that's why it's very critical to look at that elevation certificate and to figure out what's going on with your property specifically. Here's just some surveyors that are in your area. Like I said in the beginning of this PowerPoint, we educate professionals all across the country. Surveyors are one of them. Every year I go down to their conference and do a 4-hour class on how to fill out the elevation certificate, how the elevation certificate translates to flood insurance premiums so that they understand what they're doing and how critical it is for the homeowner to make sure it's accurate. I'm going to show you a case study here later that shows what a small error on an elevation certificate could cost a homeowner, and it's thousands of dollars on their flood insurance. So that's something that we also look into. We look at the elevation certificate. If something's wrong, we'll point that out and try to get it fixed. So we have our FRE, our Flood Risk Evaluator service. That's really everything what I'm talking about today. And what it is we recommend mitigation steps that you can do to your home and lower your flood insurance. We've been doing it now for over 7 years. We've been able to save people collectively $11 million, over 5,800 reviews, and about 39% of these cases can be corrected by small paperwork changes or mitigation. And this mitigation, you'll get your return on investment in under 3 years. That's 39% of those 5,800 cases. Some of the top policy errors that we see, incorrect residency status, I pointed that out earlier. Check your surcharge on your deck page. If this is all, if you don't find any of this on your deck page, just like Carmen, send it in to me. I'll be able to point that out right away. I'll say, I see it's a primary house and that's what we want, or I see it's secondary. We need to get a piece of mail or your driver's license to your insurance agent to make sure that you're a primary residence. Pre-firm structure's not rated, so you're a pre-firm home, you're paying a subsidized rate, and it benefits to be rated off an elevation certificate. And I'll give you this example. I helped someone literally today. They were paying, and this was from the outreach last night, they were paying $3,200. I rated them off the elevation certificate, and they should have been paying $1,400. They switched, the renewal was next month, November 5th. Obviously, they switched because they should have been paying that for the last couple years. Undocumented flood openings, we're going to get into that. Some errors on the elevation certificate. Like I said, we train surveyors. A lot of times, the insurance agent may not know what they're doing when they're entering that elevation certificate, or they know what they're doing, but they don't understand what each number means and how important it is. And now you could be misrated, paying thousands of dollars more than you should be. So there's an example of an elevation certificate for you. It shows you all the elevations of the home, gives the square feet of the lowest rated floor. And what we're able to do here is a report that will show you what you should be paying currently, and then at the bottom there, what steps that you can do to lower that flood insurance. So in this case, adding additional flooding brings this home from $5,600, which was a -2, up to a +2, only paying $946. That's an 83% reduction. We put down the annual savings from 1, 5, 10, 20 years so that you can get your true return on investment. Like I was saying earlier, you want to be able to make sound decisions. So when I get a case, I'm looking to do 3 things. These are the 3 solutions that we need to do to lower your flood insurance. Number 1, mitigate the home to compliance. This is doable, and the return on investment is there. This is the best way to get the lowest flood insurance premium. And the reason why is because not only are you lowering your flood insurance premium, but you're reducing the risk when flooding comes because you're doing things to your home to protect it. Number 2, correctly rating the home. That's the last 3 slides I talked about that. And then number 3, private flood insurance. And towards the end here, I'm going to get into detail about private flood insurance. So reducing the flood risk through mitigation. There's two forms of mitigation. We have your dry flood proofing. Now, from a flood insurance standpoint, this is only going to help commercial structures. This will protect your home, but keep in mind you're not going to get any insurance savings by using any of these products. These are just, from a flood insurance standpoint, able to protect commercial properties and save them money. And I'm not really going to get into any specifics on them, being that we're mainly talking to homeowners here. If you do want more info, like I said, reach out. But now we have your flood openings. And here's an example of an engineered flood opening. And what the definition of flood opening, or an engineered flood opening, is it's an automatic opening that protects your foundation by allowing bidirectional water flow, which equalizes the hydrostatic pressure. Now, I know that's very technical. I'm going to give you a visual to be able to show you what this actually does here. So there's insulated ones that are more meant for garages. We have other products that are better for crawl spaces. It's all depending on your type of home, but they're ICC certified. All that means is it's performance tested. So it's meant to be a flood opening, and it's designed to work like that. Now, FEMA does also allow air vents, which you may have seen out in the at your home or other homes, and they're called non-engineered openings. So they're not designed to be a flood vent, but you're able to use them. You just have to break them in the open position, because FEMA does not want to rely on human intervention when it comes to flood openings. They don't want to rely on the homeowner to run outside, open up all their vents, because what do we do here in the Northeast? In the winter, we close the air vents because we don't want our pipes to freeze. But if a flood comes, the NFIP doesn't want to rely on the homeowner to run out and say, I got to open up all my vents because a flood's coming, because it's probably not going to happen. So to be able to use non-engineered openings, like I said, you're allowed, you just have to break it in the open position. So what floodwaters do when they come, they bring lateral forces and hydrostatic pressure. Here you can see the lateral forces pushing up against these foundation walls. We have the saturated soil down below. That's why basements are a lot riskier in flood zones, and they pay a lot more on their flood insurance, because they're not only getting the above ground lateral forces pushing up against that foundation, but they're also getting the saturated soil that's pushing up on that basement foundation. Now, here's a flood opening. This is an example of one that we don't want. We want to make sure that it's equalized on both sides. And I use my hands a lot when I talk. I'm not sure if you can see me, but if you can, don't laugh. But here we have an example of what we want to see with flood openings. We want to see the exterior and the interior equalized on both sides, because water is very strong and it's going to find its way through. So we want to equalize it on both sides to reduce that pressure. What could happen? Here's an example. When the homeowner does not have proper openings, that water comes up, then lateral forces and hydrostatic pressure pushes the foundation inwards, and this would be an example of a complete loss. So here's just a video. This is the performance testing that goes into being an engineered flood opening. You'll see that the vent's locked in place. Once the water rises, enters them float chambers there, it's going to kick the door open. Now it's going to let the water flow through, equalizing it on both sides. And to be an ICC engineered opening, you need to pass this testing. From a vent placement standpoint, vents have to be on at least 2 different walls, and have to be no more than 12 inches from the closest adjacent grade, whether that be interior or exterior. But it has to be within 12 inches, the bottom of the vent, of that area. So moving on to a case study here. Here we got Peoria, Illinois. Why I'm showing this is because it's a great example for riverine areas. I have a ton of coastal examples, but I really feel this is a great example, being that most of your flood zones in Pompton Lakes are riverine. So some of the statistics here: this home was pre-firm, built in 1952, in an A13 zone. The BFE in that area is 460. You'll notice that's a lot. If you're familiar with your BFE, that's a lot higher because it goes from mean sea level. Obviously, Illinois, in the middle of the country, is a lot higher elevation-wise than here on the coast, where we're almost at sea level. It was elevated in 1992, so the homeowner raised his house in 92. It was the gentleman's primary residence, and the way he built the house after he raised it was as a building diagram 7, which just means a unfinished enclosure underneath the living floor. And the gentleman was paying $2,000 a year for his flood insurance. So looking at his deck page here, there's a ton of errors. First, we see that the agent had down that they had proper openings. You'll see at the top there, enclosure with proper openings. They actually had no flood vents. Also, the date, it says 1920. While that's correct, that's when it was built. When you do a substantial improvement to your home, like lifting it, that's the new born on date. And he, like I said, he was paying $2,000 a year for his flood insurance. Looking at the elevation certificate, the surveyor had it down as a building diagram 1A. What that means is he had it listed as a slab on grade, where you walk right into your house. You walk right in, it's finished space. Really, it was a diagram 7. Why that's important is because a diagram 1A, we can't rate you off the next floor. A diagram 7, we're able to rate you at that next living floor where we can get you higher up and a better elevation difference. And then there you'll see the square footage of enclosure space at the top. Right below that, you'll see the amount of flood openings. And then under that, you'll see the coverage of flood openings. We always want to make sure that that bottom number, you'll see 1,000, is greater than that top number, meaning that you have as much or more flood opening coverage than enclosure space. So looking at the elevation certificate, without flood openings, we have to rate you at your bottom floor. In this case, his bottom floor, and insurance rounds up. So 450.9 rounds up to 451, was 9 feet below the BFE. That BFE, remember, was 460. When I'm looking at this elevation certificate, when I looked at it the first time, what I'm saying to myself is, how do I get that rated off that 461? Because that's 1 foot higher than the BFE, and a +1 is way, way better than a -9. So to give you a visual, that bottom floor was a -9, right? 451, like we showed on the elevation certificate. That actual risk rate was over $9,000 a year. This was 5 years ago, so the subsidized premium at that time was a lot better. That was the $2,000 that Mr. Wagner was paying. Now the after, that's where we want to rate him, that +1, 461. And the way we do that is we exempt that lower area. And how we do that is by installing sufficient flood openings. By doing that, it exempts that lower area, and now I can rate you off that living floor. And in this case, it's 1 foot higher than the base flood elevation level. Here are the vents going in. Remember, no more than 12 inches, at least 2 different walls. Doing that brought him from $2,000 a year down to $511. It only cost him $1,200 to do that. He pretty much made his money back within the first year, and we still have that insurance policy. This was back in 2015. He's still under $600 a year for his flood insurance. And here's the Wagners. They just gave us a quote here saying our premium went from $2,000 a year to $500. We even received a refund check back for the difference since we paid for the year. So, as most of you know, if you're on here, you're probably paying flood insurance. It's paid up front in full for the year. But if we make a change mitigation-wise to your house midterm, we can get you that refund check back for what you originally paid for, using the new rate that we get you at. But here we can see a video, and I see a question, Victor. Let me just show you this video real quick. This is during a flood event, and you can see that the flood doors are kicked open. It's equalizing the pressure, but here's just to give you a look at an actual flood event and then flood openings in use. And there's just a visual looking out the Illinois River. You can see how high that water rose to. But afterwards, he did not have a claim. His home was protected. And then here's just some examples of other homes that we've been able to help in the past. And Victor, you had a question?
Yep, let me unmute Victor. So go ahead, Victor.
Hey, good evening, guys. Victor Garcia. I have a question about what you mentioned earlier about fixing a rate that you already had. I just updated my policy on October the 5th, and right now I got my elevation certificate. I was going through an NFIP program, and I'm trying to change it from a FEMA one to a private. Yeah, to private, correct. Now, the guy was telling me that I cannot change my policy because it just went into effect. Now, if we do some type of mitigation or something like that where, you know, if I show my policy, my elevation certificate, is there any way that we'll be able to move from one company, from an NFIP to a private flood insurance, or no?
No, unfortunately not. Trust me, I wish that was changed. But no, unfortunately not. You cannot move from one company to the other company. This is only your existing policy. So if you do something to your home that fixes the rate and it shows that the NFIP rate should be less after you do that work, then you can get a refund with your current policy. Not a full refund, down to what the new rate is. But you're not able to cancel a policy midterm and switch to private. You can only do that at renewal, unfortunately.
No problem. One last question, if you don't mind, and you might cover this later on down the presentation. I am a veteran. Is there any discounts or anything for veterans? I have asked a couple of companies, and nobody has given me any type of discount or nothing like that. So I don't know if there's any companies out there that give discounts to veterans.
First,
and that's my last
thank you
question.
so much. Thank you. But first, thank you so much for your service. Unfortunately, you're not able to get a discount. Homeowners auto insurance, as I'm sure you're taking advantage of, you do get a discount. Flood insurance, you don't. The NFIP program does not offer discounts of any form, really. And then these private companies, they're not offering really any discounts as well. Most are backed by Lloyd's of London. Not that that means anything in this question, but no, as of today, they're not really. These flood insurance carriers are very different than homeowners insurance and auto insurance. Hopefully in the future, though, that should be something that is changed, but not today.
No problem. Thank you very much, sir. I appreciate it.
Sure thing.
Before you move on, I have one question. So the example that you showed and the effectiveness of adding the flood vents and allowing to rate off the next higher space, that only works in a situation where that first level, whether it's under an elevated structure or whether it's a basement, it only works if that's non-livable space, right?
Yes, that's correct. Yep.
So if you have a finished basement, we have a couple of standard house types in our floodplain. The whole neighborhood was about built in the same time frame. So we've got a lot of Y levels that are slab on grade. We have a lot of capes that have basements, many of them unfinished. We have a lot of ranches that have finished basements. So in that situation, for a homeowner who has a ranch with a finished basement, then in order to take advantage of the mitigation with the flood vents, that basement would have to be unfinished?
That's correct. And actually, not only would it have to be unfinished, because like I said, I'm going to give you all the information. I don't want to hide anything. So with basements, they have to be unfinished, and you're going to have to fill it because vents aren't going to help subgrade spaces. We need to get rid of that subgrade space by adding fill and then installing flood openings. But I'm going to get into private flood insurance next. As Victor brought up earlier, he was looking into it. That's a great option for people with basements and stuff like that. And I'm going to explain why here shortly. But actually, right here on this slide, you get personal property in basements covered through private flood insurance. And here's just some of the coverages that private offers that the NFIP does not offer. And another thing with private, they don't rate using the elevation certificate. While they do rate using elevations, they use what's called LIDAR. So they get the ground elevation in your area and then determine if they want to write your property and determine what the rate is going to be for your property specifically. Along with private flood insurance comes excess coverage. And what excess coverage does is it gives you a higher coverage limit over the $250,000. So you're able to get limits up to $10 million. And it can include building coverage, contents coverage, loss of income coverage. All things that the government does not offer, because these private carriers, they write what coverage they want. Now, with private flood insurance, it has to meet the minimums of the NFIP. And the reason why is that for banks to accept it, it has to have at least the same coverage as the NFIP. And like I was showing you earlier, last slide, most of them have more than what the NFIP offers. So, common questions that I get with private flood insurance. Can they pay my claim? Most of these carriers, if not all, there's a handful that aren't, but most of them are backed by Lloyd's of London. Lloyd's of London is one of the oldest insurance companies in the world, one of the strongest and largest. Also, I go based off experience. Prior claims that I've had personally with clients during Harvey down in Texas, Irma down in Florida. I had some here in North Jersey last July, whenever that flooding was, or June, last summer. Not this summer, the summer before that, so a year and 4 months or whatever. And I've had claims over $100,000, and they were paid out in under 2 months. But I'll put a preface on that. They may drop you at renewal. What that means is now they drop you, and we have a couple options. Either go to a new private flood insurance carrier that will write you, or go back to the National Flood Insurance Program. With that, though, if you leave the National Flood Insurance Program, you're considered having a lapse of coverage, and now when you go back, you have to pay your actual risk rate. In some cases, that's not going to matter because you're already paying your actual risk rate. Now you go back and you're really paying the same thing. In other cases, maybe your subsidized rate is a lot better than your actual risk rate. Now you got to go back to your actual risk rate, and it could be thousands of dollars more. But it all depends how long you're with that private carrier. If you're with that private carrier for, say, 5 to 10 years, and you save $3,000 a year staying with the private, well, you know, in 5, 10 years when they drop you, say, and you go back to them, the government, now you're back to, say, what, 7, 8 grand, worst case scenario, 9 grand, 10 grand. Well, you save, say, 15, 20 grand over the years being with private. So I just like to point out everything, like I said, lay it all out on the table so that you can make a sound decision when mitigating your home, when switching your private flood insurance, whatever the case may be. Some other questions that we get: will my mortgage accept it? FHA will not accept it, private flood insurance currently. I work with the MBA, which is the Mortgage Brokers Association. I had a call with them actually in May or June. Unfortunately, COVID threw off the meetings that they were going to have with the FHA and the government to get that changed. So they told me that it's all backed up because of COVID, but that should be getting changed soon. It's just a wording issue that hasn't been addressed yet by the government. My guess is it's not going to be addressed till probably next year, but who knows. Conventional mortgages, you're able to go to private flood insurance. They will accept it. It's getting bigger and bigger. When I originally started writing private flood insurance, say 5 years ago, I'd say, about now, banks weren't really sure what it was, so I'd have to like explain it. I'd have to send policy packets and stuff like that. But they've gotten a lot better with it. It's becoming very common. If you're taking out a conventional mortgage, they're going to accept it. And then the third question here, not affordable. A lot of people think when they hear Lloyd's of London that it's more expensive. Actually, it's generally 30 to 50% cheaper. Now, the kicker with that is that these private carriers are able to accept and decline properties. So it's not a given that, hey, if I go to private, I'm going to save that much. They might not accept you. What goes into the criteria, they're all, each carrier, we have over 12. There's a ton of them. We have the most, though, that are out there for the most part. And they all do their own testing. They all set their own criterias on what risk they want, how much of an area they want, how much modeling they're doing on each area to determine what they want. But like I said, they can accept or decline you, but if they're accepting you, it's generally 30 to 50% cheaper. So some of the steps that you can take as a resident: sending your documents for a review. We'll do a report for you, and then we can review it together on a Zoom, on a call like this, over the phone. We're not really doing in-person stuff too much, but that's always a possibility. And then here's that link again. There's my customer service line. That will go right to me or my staff, and you can just ask for me. My name's Tyler again. The elevation certificate will help. Your current deck page also helps because we talked about it through this whole presentation. All that info I can grab from it and give you the answers from it. But there's that email address, like I said, unique to Pompton Lakes. And with that, I'm all finished. So is there any questions that anyone else has?
First, Tyler, thank you so much for the presentation and the information and for setting up the email address. First, with regards to that, the consultation of a resident sending in some questions and their elevation certificate, is that something that there's a fee associated with?
Nope.
So the
no fees. No fees. Send that info in, we'll review it, and get you your answers.
And I did have a question here. I'm looking over, Flood Board had put together some questions, and I was just looking at one, and now I lost it.
Lauren, I think Carmen may have had another question.
Okay.
Carmen, did you raise your hand again? No. Or is it Victor? Somebody did their hand up.
No, I did not.
Okay.
I raised my hand.
Oh, go ahead, Victor.
Yes, sir. So my question was, is this service, do you need to pay for this service for you to take a look at the elevation certificate and the declaration page, Mr. Tyler?
No, sir. Nope. Like I just said, there's no fee for any of this. Hopefully we get your answers for your unique situation. Just to give you a little background, because that was asked a couple times here. Just to give you a little background, we started doing this after Hurricane Sandy to give back to the communities and help people get their answers. So no, to answer your question directly, Victor, there's no charge.
Thank you very much.
I think Susan had a question first. Susan, do you have a question? Or I think she put a... I don't know if she's coming through. Give her a second. All right, well, I'll jump over to Kathy. Had a question. I'll mute her. Go ahead, Kathy.
Hi. Thank you for all the information tonight. My question is there a standard cost for an elevation certificate?
It all depends on your area. For your area, I'd say it's anywhere from $600 to $800.
Okay.
And don't think that, you know, if you're paying $800, you're going to get like better service or something like that. What I recommend is, and I showed you a couple surveyors there, but there's more that are out there. What I recommend is really calling a bunch of them, getting the best price you can find, send it in to me because I'll be able to point out any problems if there are any on there.
Okay, yeah, because I had just found, I just went through the renewal process also, and I guess we had a rezoning in April, and most of my property was rezoned to X, and there is one corner of my house that still falls in AE.
Yeah, so to be, just to go off of that for you, if it's on your property, technically you shouldn't be required to have flood insurance. But if it touches your structure, that's when the bank will require flood insurance. It sounds like it's touching the corner of yours, that right?
Just the corner, and it's a difference of you know, between $2,000 and $500 in premium.
I know. Yeah, yeah. Do you have an elevation certificate yet, or no?
No.
Okay. That may be something to look into. Okay. But send me that address. Have you ever had claims?
Never.
Yeah, send me that address. If you're on the border like that, you should be able to get private flood insurance for super cheap.
Well, this was also through a private flood insurance, but they're the ones who actually finally told me it was because one piece, because I was looking at the map, I'm like, no, I'm in X, I see it. Yeah. But there's boundaries, and the corner of my house touches the boundary.
Yeah, but no, I'm saying you should be able to get a quote lower than $2,000 even.
Okay. Yes, that's what I'm hoping for.
Yeah. Send your info to that email, and I'll take a look at your address. Because if you're that close on the border, that's something that private companies look at. They're looking at how far you're from the flood zone. If you're super close like that, you should be able to get a pretty good rate.
But does that have to be approved by the bank or no?
It depends. If you're a conventional loan, we can get it passed through.
Yeah, I'm not.
You're FHA? Yeah, we have to go government then, unfortunately.
Sounds like a good time to refinance.
You get a good rate too. Yeah. I do a lot with the real estate market too, so I got answers on them too.
Okay. Thank you.
Sure thing. I think there was a couple other people it looked like were clicking in right there.
I found Susan had a question about just the information from you, but she said she found it was answered. And then Lauren had a question. Lauren, you can unmute yourself.
Awesome.
I finally found the question written down that I was looking for. So if our elevation difference is not listed on the declarations page, mine is blank, it doesn't even say NA. And I know my carrier has no record of the elevation certificate I submitted many years ago. How do I find out what the assumed elevation difference that I'm being rated on is? That was not clear grammar.
So if you see elevation difference and nothing's there, it's most likely that you're paying a subsidized rate. And if you submitted it years ago and you're asking them for another good way to check is say, can I see my elevation certificate to the insurance agent? You can go onto the carrier's site and you should be able to see it. If it's not there, then they're not rating you off it. And that's something that we want to look at to see if we should rate you off it. Because if you're paying a subsidized rate, it's getting to the point where you probably should be rated off your elevation certificate.
Is there any way that I can find out either from the declaration page? Because I had this conversation with them. They claimed that no elevation certificate was ever submitted. And I said to them, well, can you tell me what elevation difference I'm being rated on? And they claimed that they couldn't give me that information. So, and then we tried to switch policies and then, pandemic and didn't get around to it.
Yeah.
So I don't know if there's any way to tell short of trying to pry it out of them again. Or maybe I just send you this.
Yeah, send it over because the only way to tell is looking at the elevation difference, if it says a number or if it doesn't say anything. If it doesn't say anything, then you're not being rated offline.
Okay. So.
And then what happens is you have a subsidized rate, and you're going up 18 to 25% a year since 2016.
Yes.
And then that means we want to rate you off the elevation certificate. So I want to see that elevation certificate.
Okay. Thank you.
Sure thing.
All right, Tyler, I had one from Anthony. So, Anthony, go ahead.
Yeah, Tyler, thanks for the presentation. I just had a question. I actually have what's considered a finished basement. Yep. Is there any benefit in me getting an elevation certificate, or it really is moot at that point?
It's tough. What I recommend in cases like that, if you have a neighbor or someone close that does have one, take a look at it and either send it to me or look where it is compared to the BFE, because I've seen where there's basements that are almost at BFE, because it all goes off the ground elevations and everything. So it really depends on your specific house, and you can get a good gauge of that from a neighbor. So if there's a neighbor that has one, that could help.
Yeah, I've asked. Nobody around here does. I was going to partner with one of my neighbors, and we're going together on it. But I just didn't know if it was worth it with a finish. I have a half finished. It
could be. And listen, it will be eventually, because this subsidized rates are going up every single year, 18 to 25% a year. They're not stopping until you get your actual risk rate. So there is going to be a point where it's going to be beneficial. So I'll tell you this, Anthony, it'll never hurt you. If your subsidized rate shows that it should be cheaper than the actual risk rate, you keep the lesser of the two. So you keep your subsidized rate in that case.
That was another question. If I get a LA certificate and that actually turns out to be worse, would they automatically increase my premium?
You want to tell if they do, then something's wrong there. You want to be rated off your subsidized rate if that's the case. So it'll never hurt you though. What it'll do is it'll show you your actual risk rate. So if you do get that, let me know, because then I'll make sure that it definitely doesn't hurt you by sending it to your current person. I'll look at it and say, this is what your actual risk rate is, and then you judge, should I submit this yet, or, because then we'll see how much you're paying right now.
Okay. All right, thanks. Thanks for the guys.
Sure thing.
Do we have any other questions, Steve?
I think that's it for right now.